This video is going to help you understand the answering techniques and the easy marks for question number 1 in the Advanced Audit and Assurance exam. We are going to be using the March-June 25 exam as a reference point. This is basically going to be a debrief which incorporates all the techniques that are super important for getting the technical and professional skills marks. I'll start by talking about the recommended reading and planning approach. This might or might not work for you, but there's no harm in trying it for one of the case studies that you practice as a part of your preparation. I always recommend my learners to start by reading the scenario very quickly, as if you're reading the newspaper. You're not trying to retain any of the information or knowledge. All you're trying to do is understand the story that has been mentioned in the scenario or the events that are outlined. You do not need to read through Exhibit 1, which outlines the requirements. You do not need to look at the numbers or the financial extracts that are given. Just read through the narrative portion to understand what has actually happened. And I would say spend about 5 to 7 minutes to sort of go through step number 1. Then, and this is where you start using the highlighting tool and picking up your answers. The second time around, I would want you to read the entire scenario again, starting from the background information given. Use the highlight function, understand the requirements in Exhibit 1 very, very carefully, identify the risks. Remember, audit risk or risk of material misstatement is always going to be tested in question number 1, and business risk might or might not be tested. In both cases, the second step is very important because this is when you actually are spending time on planning your answer. I would say spend about 15 to 20 minutes on this. And if you're comfortable with the learning environment or your platform, I would also recommend that as you identify risks, you can actually start copying them onto the response area, because these can then become your headings that you later on evaluate. The third part or the third step is where we start typing up the answer. I would want you to create a structure or a template in your response area. This way, it'll be very difficult to forget the easy marks that I'm going to talk about in just a few minutes from now. Another thing I really want to emphasize is in AAA, it's very rare that learners are going to fail an exam because they did not know what was asked. It was primarily because they were not able to complete the exam within the allocated time. And I would highly recommend that you allocate time to each part. So not each question, but each part, and then be very disciplined in sticking to that time allocation. So the recommended time allocation for typing up the answer is 1.5 minutes per mark, which basically means for a 10 mark requirement, I would want you to spend 15 minutes in typing up the answer and then move on to part B, even if you feel that you know more that you can write in this particular area. Now, the template that I was talking about is going to be shown on the screen step by step. This is the outline that I want you to make, because this way you will be able to ensure that you get the easy available technical and professional skills marks. I will start off by writing to from subject introduction. This is basically the format of the briefing notes, and you get 1 mark for writing this. So obviously fill this out. So to the engagement partner from the audit manager, subject could be planning of XYZ, whatever your client's name is, and the introduction will literally just be a summary of the requirements. So these briefing notes consist of business risk, ROMM, etc. For each business risk, if it is recommended, I'm going to write this down as my template so that I don't forget it. Remember, it is going to be 2 marks per business risk. So for a 10 mark requirement, I need to write 5 well evaluated risks. You need to be very comfortable with what well evaluated means. Your identification and implication gets you the 1st mark. It's the evaluation that gets you the 2nd mark, along with some professional skills marks. So I always say, think of it like this. For example, if a client has breached a law, the implication is there's going to be an outflow of cash and potentially an impact on the reputation. Now, this discussion gets you the first mark because this implication is going to apply to any company across the world who's going to breach a law, right? So a potential outflow of cash and then, of course, an impact on reputation. So your initial mark is for implication, and think of it like this. This is something any company would face if they are actually facing a similar risk. The second mark is the important one because this is where you get your professional skills marks along with this additional technical mark. For evaluation, you are looking at why this risk is particularly significant for this client in the scenario. You could get your evaluation mark by linking it to other risks within the question. You could link it to other information given in the question. So in my example, if I've identified that breach of law is a potential risk, the implication is cash outflow and an impact on a negative impact, of course, on the reputation, which could affect my revenue, then the evaluation needs to have something which is more specific to the scenario. So I went through the financial information. I can see their cash balances have gone down. So in the evaluation, all I could actually write is this will increase the liquidity issues that the client is already facing. So again, because I have used information, I'm getting my second evaluation mark. Or maybe it's one particular branch of that company which has breached a law, but the evaluation could be across the entire organization. There could be a loss of revenue. So I'm using information from the scenario to explain how significant this business risk is for this particular client. So remember, it doesn't matter how many sentences you're writing. That's not how you're awarded marks. You're basically given credit for making sure your identification, implication, and evaluation is correct. So identification comes from the scenario. Implication is an initial impact that you think could go wrong. So remember, it's a risk. It's about what could go wrong. And evaluation is using further information from the scenario to evaluate why this is particularly a problem for this client. The template for risk of material misstatement is very important because this is where most of our marks are going to be. For the question that we're going to be debriefing soon, the requirement was for evaluating risk of material misstatement for 16 marks. I am going to allocate 24 minutes to this and write as much as I can, of course, making sure I follow the answer techniques. Starting off with the easy 3 marks, which are for materiality. I'm going to pick up the benchmark that is specified in the requirement. I cannot make it up myself. I'll have to use the benchmark which is indicated in Exhibit 1. I'm going to write the range. I'm going to carry out a calculation. And then my third mark is for justifying the choice of the lower or mid range. Please remember, this is a risk question. I cannot possibly justify choosing the higher end. So I would say I have chosen 5% of profit before income taxes because there are significant risks in this question, such as that related to X and Y. If you simply say, I've chosen the low end because there are significant risks, you're not getting the third mark. You have to make sure that you use examples from the scenario to give that justification. So literally, you would have read the case study twice. All you have to do is give 1 or 2 examples of risks that you've already identified. So super easy 3 marks for range, calculation, and justification. And then for each risk of material misstatement, I'll start off by commenting on materiality. So I'll simply say, based on my chosen threshold, this amount is or is not material. Remember, you're not required to do a percentage calculation, just simply state it is material. If there are numbers related to that risk given in the scenario, you get marks for a trend calculation. So for example, if you're going to be talking about early recognition of revenue, you could simply say revenue has increased by 7% and then go on to the next step. So that correct calculation of a trend or a relevant ratio is going to get you half a mark for calculation. So you can get around 2 to 3 marks in question number 1 for using calculations which are relevant to the risks being assessed. The next part is very important. You need to explain the relevant accounting treatment that should have been followed. You do not need to write the accounting standard numbers, but the treatment or the accounting rule, as we call it, is going to be awarded marks. So for example, if it is impairment, then you need to talk about comparing the carrying value to the recoverable amount, and the recoverable amount being the higher of value in use and fair value. So that accounting rule gets you a technical mark. Then you get technical and professional skills marks for talking about scenario specific risks. So yeah, for my impairment rule, based on the scenario, my risk or my concern is the fair value requires judgment. It might be biased. Value in use requires the estimation of forecasts, which are complex and have uncertainty. And therefore, the risk is that these could be misstated. So your risk, whenever I do a green tick, we're basically linking the professional skills marks. So the risk portion gets you your technical and professional skills marks. And then we talk about the financial statement impact. So in my example, the risk was that the impairment review has not been done. And because of that, your assets and profit could be overstated. Remember, it could be a double entry, which is misstated, or it could be a disclosure, which is inadequate or missing. There are always about 1 to 2 professional skills marks for management bias across the question. So if you feel this could be intentional overstatement of assets or revenue, please link that here. Your management bias needs to be justified. You can't simply say it's a listed company, therefore there's bias. There is going to be some other motivation given. It could be that they have ambitious expansion plans. It could be because they took out a new loan during the year. It could be because they're planning or taking out a loan or planning on getting listed. Maybe they get profit-linked bonuses. So some indication is going to be there. And after I've done my evaluation of the risk of material misstatement, I should stop and think if I can actually link management bias for my professional skills marks. So I've tried to put this on one screen so you can visualize this. I got 3 easy marks for materiality. I got an additional professional skill mark for commenting on materiality. And then for each risk of material misstatement, I can get about 3 to 4 marks depending on how well that risk is evaluated. We're not done yet. Just before I finish this part, I can get up to 2 marks for prioritizing significant risks. I'm going to keep this nice and simple. I'm going to quickly read through my evaluation or my answer. I'm going to pick up 2 risks which were the most material, plus had some element of complexity, estimation, or bias, and I'm going to write that down. So I'm going to say the most significant risk is maybe revenue because it is the most material and there is a risk of management bias. The second most material risk is maybe impairment of the property, plant, and equipment because it is quite material, plus it incorporates complexity in the estimation of forecasts. So exactly the same justification that I used in my risk portion, I'm actually, based on that justification, I'm actually concluding and prioritizing any 2 risks. Keep it nice and simple. To correctly prioritize risks with justification will get you these 2 easy marks. So just stopping here for a second, I started off with my format for briefing notes, which was to from subject introduction. I made sure if the question requires business risk, it is evaluated properly, which is identification, implication, and evaluation. And then for risk of material misstatement, I'm going to make sure I have this template outlined and I can fill this out. Just very quickly identifying the difference between audit risk and ROMM. If in the AAA exam, the question asks for audit risk, this means you'll get marks for ROMM as well as detection risk. On the other hand, if the question only asks for risk of material misstatement, this means there'll be no marks for detection risk. So either way, ROMM is always going to be there. There's no running away from this. And this is where most of my easy marks are anyway. There will always be a requirement on procedures. This one in particular was slightly odd because it's quite AA level. But for procedures, all I'm doing is I've taken the allocated time and I know I can spend 9 minutes on this at the most. For 6 marks, I am going to be writing 6 or maximum 7 well-explained procedures. When I say well-explained, I need to make sure each procedure has a source and a purpose. So what are you doing and why are you doing it? You can't simply say inspect the non-current asset register. You need to tell me you're confirming the carrying value. You can't simply say have a discussion with the management regarding the assumptions used in useful life. You need to tell me it's because you need to confirm that those assumptions are reasonable based on your understanding of the client. So as you design your procedures, make sure the what and the why are covered. In this question, they asked for ethical and professional issues. Ethical issues do come up quite frequently, and they do have a format. Remember, I need to make sure I explain the threats which arise. I should have learned what the code says about this. So I'm going to explain what the code says, the code of ethics, and then I am going to evaluate whether this threat is particularly significant based on the scenario given. And very important for my technical and professional skills marks, I need to come to a conclusion. So a conclusion could either be go ahead and do this, or it could be this cannot be done because the threat is too significant. So when we debrief part D, we'll see how this is applied. So this is the template I'm going to outline for parts A, B, C, and D, and this will sort of keep me in check and make sure I don't miss out on the easy marks. I am assuming you would have sort of paused the video here and gone and read the case study twice on your own, and then you're coming back and watching this video. I can't potentially read the entire case study with you, so I'm just going to focus on the highlighted portion. This is the March-June 2025 case study. So in terms of the background information, just looking at a few important points. Today's date is given, it is the 1st of July. Your client is an unlisted family-owned company and it is an existing client, and their year end is the 30th of September. Now, these are points that I will be highlighting. I make sure I remember them because I'm going to use this information later on. We have the list of exhibits given. I won't really worry too much about this. It doesn't matter what the names of the exhibits are. I'll have to go and read them anyway. And then we know it's 40 technical and 10 professional skills. Exhibit 1 will always outline the requirements, so I'm going to be very careful as I read through this. I am going to use my highlight function extensively in the exam. I've been asked to use profit before income taxes as the basis of my materiality. So as I start typing up my answer, I will have to use 5 to 10% as the range. Using exhibits 2 and 3 only, I have to evaluate business risks for 10 marks. Using exhibits 2 and 3 only, I am going to evaluate risks of material misstatement. And this is a reminder that you will have to determine and apply materiality. Now, for parts A and B, this is very important because this means I do not need to read through exhibit 4 to answer questions or parts A and B. We'll look at the background information later on when we come to the debrief, but in part C, for 6 marks, I need to design procedures using data analytics for the audit of inventory. The examiner has specified that you're not required to design any other procedures outside of data analytics. So we're going to be using audit softwares and other data analytic tools to audit inventory. In the last part, using exhibit 4 only, I need to discuss ethical and professional issues for 8 marks. So as I start typing up the answer to part D, I will only have exhibit 4 open in front of me or on the side of the screen. I'm going to read some of the background information and then we're just going to start with the business risk debrief. Just highlighting a few important points. The client is a retailer in the online fast fashion industry. They have an online presence in 12 countries. They release approximately 50 new products a week. They use social media marketing campaigns, and they have some top selling products which are reordered from manufacturers within days. They have a growing customer base. They sell via the website or the application or an app that they have on the customer's phones. The integration of the app and accounting system has been tested in the interim audit, and it is working effectively. So you can't discuss this. There's no issue with the integration of the app with the accounting system. They regularly run advertising campaigns to try and sell slow moving inventory. So that's sort of like my red flag now raised, because I am going to be concerned about the inventory valuation. They purchase their products from suppliers in the country of farland, where labor costs are low. When products leave the supplier's factories, ownership is transferred to the client, and the client owns distribution warehouses, but they use third-party delivery networks in 12 countries to deliver products quickly. So the examiner gave you all this background information, and then the examining team was super nice because they summarized this diagrammatically. So they've said exactly what they've written in a shorter form, which is easier to look at, and you can understand the business model. So as I was reading the question the second time around, I was highlighting all these key points. We're now going to start looking at the answer to part A, which is your business risk. Now, the company has a high level of customer returns, and they give a full refund if the clothing is returned within 1 month. Now, based on this, I can actually think about a number of business risks. I'm concerned that a large number of returns would have a negative impact on revenue, profits, and cash flow. This is my initial implication. I can evaluate this further by talking about the cost to the business in processing the returns. So there are going to be numerous costs associated with this. This could include determining if the goods can still be sold, etc. So that additional cost in processing the returns could be a risk, because ultimately I might need to incur that cost plus sell those goods at a reduced margin, which would again impact profit and revenue. So I got my initial implication mark, and then I evaluated the risk further by going one step ahead, by talking about additional concerns that I have for this particular client. In the second one, quite frequently tested, this is about weak corporate governance. All of the executive director roles are performed by the Hadid family members, and the board has no separate audit committee. There's only one non-executive director who's a friend of the family and is a school teacher. The directors are planning to list the company on the stock exchange. For business risk, I cannot talk about manipulation, but this is something I can use later on in part B. Now, weak corporate governance is always a business risk, because this means that you have lesser control over the operations. There could be higher chances of ineffective decisions being taken. With this question in particular, because all of the executive director roles are by the family members and they have no separate audit committee, I could have a number of implications and then further evaluation. This would restrict the skill set and experience of the board, which would affect the optimum running of the business. The lack of the audit committee and the fact that there's only one NED who doesn't even have the relevant experience ultimately means that controls could be weak. So there could be a failure to control the business and guide the business operations effectively. This is a fancy way of saying ineffective operations could mean higher chances of problems in running the business. And ultimately, what basically I'm getting at is the lack of appropriate corporate governance is not only a problem at the moment, but this could also affect listing plans. So my first mark is for implication. for my evaluation, I could be either writing this or talking about implication for listing plans in the future. Remember, for listed companies, they need to comply with their own country's corporate governance guidance or code. So that was my second risk. Moving on to the third one, I had to fit this on one screen, so it's slightly smaller, but you would have read the case study, so hopefully this would make sense. Now, they purchased 5 established online brands in the previous 10 years. Before the year end, they are expected to complete the purchase of another brand, which is a high street retailer of furniture and homeware stores. So the minute I read this, I was quite happy because I know one of the examiner's favorite business risk is diversification into a new area or a new product, really. And this particular brand that I'm purchasing is already facing closure due to poor sales. This is the first time they're buying a brand which was previously only sold in retail stores with no online presence, and they are going from fashion into homeware. So the scenario itself gives you a number of risks that you can talk about. They've given further information about the cost of the brand. It is expected to cost 3 million, and similar to previously purchased brands, this is going to be held at cost and not amortized. And there have been newspaper articles suggesting that they have overpaid for this brand or overpriced the brand. Now, the last paragraph, this one is particularly important for risk of material misstatement, but as I was reading the case study the second time around, I would have highlighted this. Now, as far as business risks are concerned, you could get actually up to 4 marks with this. You could talk about the purchase of a failing brand. Remember, so it's given in the scenario that the previous customers are not very happy with it. Plus, it's mentioned that they have retail stores, no online presence. So my concern is that the previous customers will not readily transfer to making online purchases, which means that the acquisition might not be successful, resulting in a decrease in revenue and profits. This risk is particularly bigger because this is already a failing brand. So I get my implication mark and then I get my evaluation mark. The customer base is different. This brand is already failing. So combined, I'm concerned the acquisition is not going to be a very successful acquisition for this client. Then a separate category is their expansion into homeware. This is a new area for the company. They have different customers, different demographics, and because of that, I'm concerned that the expected return on investment might not materialize. So I'm talking about this not being successful because it's very different to what they've done before. For evaluation, you could talk about extra costs because of the diversification, which would put pressure on cash and margins. I could talk about the fact that homeware is quite vulnerable to breakage in transportation or transit, so that could affect profitability. I could also talk about the fact that the management is going to be so busy on focusing on this new brand that their existing operations could be affected. So the first mark was for implication, and then I could be writing any of these as my evaluation mark. So that's 2 more risks covered. We then had further information. In May, this is before the year end, a large ship which was carrying the inventory owned by the company with a value of $840,000 was stuck in the shipping canal, and this was due to be delivered in June, but is now expected to be delivered at the end of August. They've said that this caused delay in the client being able to distribute the clothes for the short summer season, and they've mentioned June to August, and this has affected 30% of their online market. The finance director, of course, is very optimistic, and they're saying that because this has been extensively marketed ahead of the launch in June, it is still going to be saleable at full price. I know you're thinking IS2, but remember, we're only focusing on business risk at the moment. So the business risk here is that the goods are going to be received when the season is almost over. This means I will not be able to sell it at the full price, which means lower revenue and ultimately affecting my liquidity. I'm concerned, so that's my implication mark. I'm also concerned that because this has been already marketed quite heavily, there is going to be an impact on my reputation, and my customers could be switching to other alternatives which are readily available. So remember implication and then an evaluation by linking it to another fact, another piece of information, or another risk from the scenario. We have some more information given. A prominent news organization has published an article saying that there are poor working conditions of employees in a clothing factory, which exclusively supplies products to my client. And the news article has been widely read and shared on social media. There is a very obvious risk attached to negative publicity, and this could affect my revenue and cash flows. So remember, all risks ultimately are problems because they are going to reduce my inflows and my revenue. So you could call it cash inflows, then maybe in the next risk, talk about liquidity. So you can use these terms interchangeably. We had some financial information given, some extracts. I've done my percentage change calculation as a part of my initial planning. I'm going to use it later on, one way or the other. I could talk about the competitive environment as a separate risk. The examiner always gives these easy marks. So the fashion industry is quite competitive. They need to spend a significant amount on advertising. There is always a risk that you could be losing your customers to competitors. And again, this is a generic implication for any businesses which operate in a competitive environment. Now, to evaluate this risk further, my concern is the designs might not be successful, which could put pressure on the profit margins and cash flow. And then I can link it to the information given in this scenario. I could say that my gross margin has already gone down from 10.2 to 5.7. Remember, I am going to get my calculation marks because I have now correctly used calculations to support a risk. So these were the business risks that you could link to the scenario. Remember, I'm going to allocate time and I'm going to write as much as I can within those 15 minutes, making sure I identify, explain the implication, and then evaluate. We're going to use the same information, but this time around, talk about the risk of material misstatement. We'll start by, of course, getting my easy marks. 1 mark for the range, 1 mark for the calculation, and 1 mark for the justification. So if you note, I have, or the examiner has picked up words from the scenario. This is the proposed brand purchase and potential listing, and because of that, I'm using the lower range. Remember, from AA, when risk goes up, you have to decrease your materiality. And I've justified how this is a risky client by using words from the scenario, which is why I've chosen the lower end of the benchmark. I'm just going to read through some information, then we'll start talking about the risk of material misstatement. This is, remember, so the question said that they have a return policy with the full refund if the clothing is returned within 1 month. Last year, they recognized 50% of the final month's sale in the year-end accounts. And this time around, they've estimated that these refunds are going to be 40% of the final month's sales. Now, this obviously is going to be linked to my risk of material misstatement. Now, starting off with my answer format, I am going to talk about materiality if it's a risk other than revenue, because of course, revenue will always be material. So I'm ignoring that portion for now. I am going to start by talking about the accounting treatment. I've given these headings over here. You don't have to do them. I've only done it for this particular risk so that you understand the format that we're following. So you don't have to say IFRS 15. You could simply say that according to the reporting framework, we need to estimate the expected level of returns and we have to reduce the revenue accordingly, and we need to book a refund liability. So really, the accounting treatment that the markers are looking for are these three keywords. And remember, you could also be writing that the inventory balance will be adjusted for any potential impairment, right? Because when it's returned, we'll have to revalue that inventory. Now, the risks are going to be linked to the scenario. There is a reduction in the refund liability, and I don't think there's any justification for this. I'm concerned this could be incorrect. This is an area of judgment because there's estimation involved. Plus, there's management bias that they might be reducing this on purpose. And because of that, my revenue is overstated and liabilities are understated. Now, this evaluation gets me my technical and my professional skills marks. If you note, I've discussed judgment, I've discussed management bias, I've explained that it is incorrect that they are reducing the liability where nothing really has changed, and I'm concerned this might not be justified. Moving on to weak corporate governance. So use this as sort of a rule. Whenever you've identified weak corporate governance, you can always link it to control risk for easy 2 marks. So I'm going to say this increases control risk. The impact on financial statements is this increases the chances of fraud or error. Because of poor controls, there could be a lack of knowledge of complex accounting treatments, and which means there could be a higher chance of fraud or error in the financial statements. Remember, the markers are looking for the word key risk and the financial statement impact. And you can also talk about the fact that weak controls are indicated by the incorrect accounting treatment that has been applied to delayed inventory. And we're going to talk about this in just a few minutes. So we're linking weak corporate governance to control risk, which is an easy linkage to make across all such questions. The font has gone smaller because I needed everything to stay on one screen. Very, very easy marks, quite repetitive. Your examiner's favorite topic. Before the year end, they purchased a brand for 3 million. So the purchase is going to be completed before the year end. All brands along with this are going to be held at cost and they're not going to be amortized. And there are newspaper articles suggesting that the directors have overpriced this brand. I can now start off by commenting on materiality because I have an amount given, a financial amount given. So I'll get my professional skill mark by saying this is material. I've not done a percentage calculation at all. I can then talk about my accounting treatment. So intangible assets with indefinite life must be tested for impairment at each reporting period. So you don't wait for an indicator of impairment. You have to do an annual impairment review. And then I talk about what impairment is. So asset is impaired when the recoverable amount is lower than the carrying value and the recoverable amount is the higher of fair value and value in use. I'm now going to continue to talk about my risks and concerns. The brand is facing closure. There's suggestions that this is overpriced and therefore these are indicators that the brand is impaired. And I'm also concerned that the existing brands might also be impaired because of negative associations with this struggling business. So I'm not only talking about this 3 million, I'm talking about all the other intangible assets or brands which have been capitalized. So lots of technical and professional skills marks for my risk evaluation. And then my financial statement impact is intangible assets could be overstated and expenses or impairment loss could be understated. So my first category of discussion was, okay, I'll just assume the indefinite life is okay and acceptable, and I'll talk about impairment. Then I'm going to query whether this actually does have an indefinite life. Sorry, I put that incorrectly, didn't I? Should go here. So my next category of discussion is whether the indefinite life, that assessment is appropriate. So I'm going to get my accounting treatment mark. Intangible assets can have an indefinite life if there is no foreseeable limit to the period over which the asset is going to earn inflows for you. I'm concerned that it is hard to justify that a brand's life could be indefinite and they should instead be amortized over the useful life. And if this is not done, the risk is assets are overstated and amortization costs are understated. So I'm covering this in two parts. Okay, I'll just pretend for a minute I'm okay with your evaluation of indefinite life. I'll talk about IS 36, which is annual impairment review. Based on the scenario, there are lots of indications. Then I'm going to query whether this actually should have an indefinite life. So super easy standards that you need to be comfortable with because they are your examiner's favorite standards, right? Moving on to one of the easier risks, this is related to the 840,000 worth of inventory which is stuck in the shipping canal. The risk is related to its valuation. I start off by commenting on materiality. I haven't done a percentage calculation. All I've said is 840,000 is material. The accounting rule is quite simple. It needs to be valued at the lower of cost and net realizable value. I can then get the easy technical and professional skills marks by using information from the scenario to carry out a risk evaluation. So the delayed inventory is at a risk of obsolescence. I'm concerned this might need to be written down because the NRV might now be lower than the cost. I could also talk about my concerns related to the fall in gross profit not being enough. So I've done my calculations and then I go on to link it to the fact that there have been a number of problems during the year with major shipping delays, and it would be reasonable to expect that the gross profit would have declined even further than is currently projected. So I'm looking at this from two different perspectives. The financial statement impact is again one of the simpler ones. I'm concerned that if the inventory has not been written down, inventory could be overstated along with profit, which could also be overstated. Like I said, as a part of my answer technique, if you can link it to management bias, you'd get an additional professional skill mark. So I'm now suggesting that this overstatement of inventory and profit could be because of management bias. So I'm linking it to a valid reason or valid indicator of bias. In addition to a discussion of management bias related to specific risks, I should ideally be able to come up with a conclusion. Over here, I'm going to be getting some additional technical marks by commenting on the increase in revenue. So I could start off by saying that the company has ambitious expansion plans and there has been a significant increase in revenue along with an acquisition of a new brand. However, my concern is that 43% is a huge increase and it cannot be justified just by the purchase of a new brand. And therefore, my risk or concern is that this could be potentially because of management bias, particularly because they are looking to get listed in the future. So I've linked bias to specific risks like inventory. I've also linked it to the unexplained massive increase in revenue, and I am giving them a valid indicator that they do have motivation in terms of the expansion plans along with potential listing. We're not going to forget the two easy professional skills marks for risk prioritization. So the examiner has prioritized the impairment of brand because A, it's the most material, and plus there's a significant risk of management bias. And then secondly, the inventory valuation is also considered significant because it is fundamental to the operation of the business and there are concerns about its obsolescence. Another very important tip or an easy one is in question number one, there will always be procedures on some of those risks. All those risks should be prioritized because the examiner has concluded that these are significant risks. Because of that, Part C requires procedures on this. So in this case study, because my procedures were on inventory, it would be logical to see inventory valued or prioritized, sorry. So remember this as an easy tip, that as I try and get my 2 professional skills marks for prioritizing significant risks, I will try and make sure that the requirement of procedures helps me decide which of these risks are most significant. Let's move on to the third part of the requirement, which is your audit procedures. They have given a bit more background regarding this. I'm just going to read the highlighted part. Inventory is going to be an area which would benefit from the use of audit data analytics, particularly when auditing their complex inventory system. So this is information given as a part of Exhibit 1. The requirement is you are requested to prepare information describing examples of procedures using data analytics, which would be beneficial in the audit of inventory for Speedy Style Co. For 6 marks, you have to design 6 procedures, and the requirement does specify that we do not need any procedures outside of data analytics. If I stop here for a second, just remember, we need procedures to confirm cost. We need procedures to confirm the net realizable value and then ultimately the valuation. And we have to combine these with data analytics. This is not just about the double entries. So if you can think of any procedure that helps in testing systems, that could be a part of your answer as well. I've clubbed the answers in different headings. You don't have to do that. You shouldn't do this in your exam. This is just to make it easier for you to understand. Again, this is quite AA level, the use of data analytics, and we're not really expecting a lot of scenario linkage because there isn't enough information given. So let's start off by talking about internal control testing using data analytics. We can test the segregation of duties by identifying combinations of users who are involved in processing transactions. So your audit softwares, for example, could tell you the combination of roles which are involved in recording the inventory. Remember, the segregation of duties is going to be a part of your internal control testing. An easier mark would be I could recalculate the inventory balance to make sure the summaries are correct. They're going to have different lines of inventory. We can use data analytics to make sure the arithmetical accuracy is correct. We could actually carry out a duplicate field research to identify any inventory which has been entered twice. So your data analytics tool is going to be able to pick up any inventory which is duplicated or entered more than once. You could be able to carry out testing to identify any manual journals posted to inventory, and you can discuss those with the management. So again, data analytics would be able to create those exception reports which help you understand which of these adjustments or double entries have been made manually, which means if there's been any human intervention, there's a higher risk of fraud or error, and we can discuss this. Moving on to confirming the cost, we can start off by confirming using data analytics to match purchase orders to invoices and payments to identify any ambiguities or anomalies in the valuation of inventory at cost price. So we can remember we have your cycle where you have the orders, goods received, notes, invoices, and then payments. If we can match those documents using analytics, we would be able to identify if there's any error in the calculation of the cost of the inventory purchased. We can then confirm the net realizable value, which is a bigger concern. So there are various procedures that could be designed using data analytics to confirm net realizable value. For example, we could compare the last time an item was purchased with the last time it was sold and the price it was sold at, because this can give you an indication about the valuation of inventory. Again, remember, if it's old, the amount it was purchased at, what amount it was sold at. That comparison can be done to identify whether the inventory has been valued correctly. So I've confirmed the cost. I'm now looking at the selling price. So when was it bought? When was it sold? How much was it sold at? So I can get an idea about the estimated selling price. I could analyze revenue trends by product and by region. This way, I'd be able to pick up any slow-moving inventory which might need to be written down. I could test the date of purchase and compare it to the date of sale, because if this is really old inventory, this could affect the resale value. So remember, we're not doing any of this manually. We are getting our softwares to do this for us. I could also analyze sales promotions and comparisons of the reduced selling price to the cost price. Because again, so for example, if the cost price was 100 and they're promoting that we're now selling it for 80, you would know that this needs to be written down. So prices which are being advertised in promotions could be compared to cost. So we could use the data analytics tool to identify all those promotional campaigns. We can also carry out a valuation of inventory by age, so aging analysis. This will help us identify inventory which is out of season and needs to be written down. We could run a report of the highest value items and make sure the selling prices are more than the cost. So clothing or items which are quite expensive, we need to see and compare it to the cost for valuation. So these were various procedures you could have written to confirm the net realizable value. Moving on to the last part, using Exhibit 4, you have to discuss the ethical and professional issues. So professional issues are really the additional points in addition to your discussion around the code of ethics. For the ethical issues, there's an answer technique you need to be comfortable with. You identify and explain the relevant threats. Based on the guidance given by the code, you evaluate that threat and then you conclude. Please don't forget to conclude, because this is where your easy professional skills marks are in addition to your technical marks. So conclusion could either be we can do this with XYZ safeguards, or the conclusion can be we cannot do this because the threat is so significant that no safeguard can manage this. As I read through Exhibit 4, I have identified a number of issues. I've highlighted them in different colors because I need to discuss them separately. The client would like to recruit one of your audit partners to serve as a non-executive director for a 6-month period. I need to remember what the code says about this before I start drafting my answer. They have asked for your assistance in recruiting new non-executive members. They have offered all members of the audit team a 50% discount on their products to thank them. And they have also mentioned that all of the team has been there for the past 7 years. And as you talk about familiarity for point number 4, please remember this is a company which is looking to list in the future. I would have learned my code of ethics. Unfortunately, there's no way around this. And based on that, I am now going to evaluate the threat. Starting off with my first one, which is when the directors would like to recruit an audit partner to come onto their board as a non-executive director for 6 months. I'm going to explain that there is going to be a self-review threat, because remember, the directors are responsible for financial statements, and the audit team will be then less likely to challenge the issues raised because the partner was a part of that. There could be a number of reasons for self-interest. This could affect any further assignments which are awarded to the firm. If the director is being paid for this, there's a possibility that the partner is in question might later be offered a full-time or a permanent role. So there's a self-interest threat there. And if this is like a temporary assignment for which the firm is being paid, that again would have financial implications. So you would be getting different separate marks for each of the different evaluation of self-interest threat. Now, the code says that for a partner, the threat is so significant that no safeguard is possible, and therefore my conclusion is that I'm going to say no. So I have explained the threats, I've evaluated the threats based on the code, and then I've come to a conclusion to say this is not possible. The second one is also a straightforward no based on the guidance from the code. Looking for or recruiting executive or non-executive board members is a part of management responsibility. It is not allowed, and therefore this needs to be declined. So again, there's a straightforward no here, but with explanation. For the discount and the 7 years, I'm going to have a discussion in two separate parts. The font is smaller because I wanted to keep it on one screen. I keep repeating this. So starting off with gifts and hospitality, there is a self-interest threat because the auditor's judgment might be compromised if they feel that they've been given a discount, so it's a favor. Plus, this could also be seen as a bribe or an inducement, and this could lead to an intimidation threat. And it is unlikely that the value is going to be considered trivial, so this should not be accepted. Remember, with gifts and hospitality, you cannot accept this unless it is trivial and inconsequential. And I could conclude by saying this needs to be evaluated, or I could conclude by saying it does not appear trivial because it's a 50% discount, and therefore this cannot be accepted. With regards to the 7 years, I start off by talking about familiarity. Please remember, and I should have said this earlier, just naming the threat is a 0 in AAA. You have to explain the threat. So if you simply say there is a familiarity threat, full stop, that's a 0. You have to explain because of the close relationship, auditor's judgment could be compromised. So familiarity, close relationship, and judgment compromised. Now, at the moment, this is an unlisted client and there's no rule for such engagement partners, but generally I should consider rotating them. However, because they're planning to list next year, this is going to be a concern. It's already been 7 years, so the partner will need to be rotated. Even now, even before the listing, you should consider rotating the engagement partner. And if you're not doing that, those charged with governance need to be informed. And at the end of it, I will have to make sure if I consider rotation, I will have to make sure that the new team and the partner in particular have the relevant expertise. So when we talk about things like experience, expertise, etc., that is covered in my professional issues. So you would note across the discussion of the 4 issues, it was primarily around the code of ethics. But when we spoke about communicating this to those charged with governance, when we think about saying things like this needs to be discussed with the ethics partner, we need to consider our experience, etc., these could count as your professional comments as well.